Hello, Forex Fortune Hunters. Tom Wilmot speaking, and I wanted to share some insights in a brief video about last night's devaluation of the yuan by the People's Bank of China. It came as quite a surprise. It was in the midst of our Asian session, which began here at with the red vertical line at 7:30 East Coast time here in the States, and all of a sudden, out of nowhere, we got this announcement hitting the wires on Trade the News and other sources that the People's Bank had gone through a 1.9% devaluation of their currency against the dollar. Typically, the yuan has been pegged to the dollar, and therefore, over the period of the last several months, the yuan has increased in value as the dollar has increased based upon strength in the U.S. economy and also the notion that the Fed was on the verge of raising interest rates. Unfortunately, the Chinese are in a pinch because their export market is shriveling up. Commodity prices have been declining, especially as they have had less production and manufacturing. And we have noted in the equity markets and the news releases of just a downward pressure on economic activity in China on the whole. So it was no longer possible, really, for China to continue and holding a value equivalent to the dollar. And this is much the same as we saw a year or so ago when the Swiss National Bank was unable to maintain its pegging to the euro. When the euro was declining so dramatically, finally something had to give, and so the Swiss bank eliminated that peg, and we know what happened. It was catastrophic in the marketplace. As the volatility increased so dramatically. Now, this wasn't obviously as bad as that, and in fact, China is looking to the IMF to see if it can participate longer term in a basket of international major currencies, and the decision on that will be out in the fall. But in the meantime, they had to do something, apparently, in their opinion, to stimulate the local export manufacturing trade. So let's just double check here and see what the impact was on one of the commodity export nations, Australia, which relies heavily on exports, and its trading partner, China, to make sure that economic activity is on target. And recently, Governor Stevens of the Reserve Bank of Australia thought he'd had things under control. He was kind of waiting for a rate increase from the United States, perhaps in September or at least in December. They maintained their reserve rate at 2%, thinking they didn't have to reduce it further and that they could not cause further stimulation of an overheating real estate market. But, all good designs sometimes go into the dumpster when some new elephant appears at the table, the elephant in the room. Sorry for that. That's just a trend change indicator that's signaling us from another chart. Bottom line here is that we had this dramatic drop right around the 8:30 time frame, East Coast time. And if we were to take a look, we could see there's one lonely candle here that represented a pullback into our multiple moving averages, which is what we like to look for in any trade entry. And what we'd like to do now is just drop down to a 1-minute chart and see if we had any better luck there. Let's see what's going on. And in fact, look, here's the perfect entry opportunity. We're below the chandelier. We've pulled back up to the EMA 24, and we're having some heat up in the currency markets here. We have a pullback to the 24, reduction at that point, come down and take out the previous low. So the trade entry looks very good from this point, and you don't have to be in this first wave. You don't really know where that trade is going to go. You're hoping for the pullback. I would have liked to pull back here. We were waiting for it in the room, and in fact, we wondered if this was going to be a V-shaped curve here, so we didn't take this one. We waited for this for the secondary takeout of this low and then a pullback into the bands here before we entered the trade, which was marginally effective for us. We did end up hitting the 1618 extension down in this particular area on the downward thrust, and you can see also that it wasn't until we got into the European market time in the London Open right here that we had any kind of meaningful recovery or just relief rally on the odd. Here's the situation as we moved into the U.S. time frame. We had a break in the chandelier. We had a pullback up into the bands towards the T3 Tilson. We're still below this chandelier. And as we move into this downward session here, we had an opportunity for another trade entry, even on the 5-minute chart. That was good for another 32 pips. So I hope that helps give a little background on what caused all of this volatility in the overnight hours. We'll have to wait and see what the U.S. Fed's response will be and whether it enters into some kind of a currency challenge with China here or whether this can be leveled out over time without causing some kind of additional currency war. Hope that helps. Thanks for watching. Good trading.